What is going on, guys? Tempo Trades. In today's video, we're going to go over some more trading psychology, how it's helped me become a profitable trader, and specifically some things you might be doing that's causing you to lose and have a worse win rate than you should. All right, so you could just see right here, this is one of my investment stock accounts, and every single dollar put into this account has been from prop firm payouts. What I like to do is at the end of every month, I will take a percentage of my payouts and I will put it into a long-term portfolio where I'm just buying individual stocks, you know, SPY, Google, just really basic stuff like that. I plan to hold this for, 10 to 20 years. And hopefully, at the end of that, it becomes a really nice amount. So you can see already, I'm almost up double of what I invested in. So these aren't all my prop firm payouts, but it is a percentage. And just it goes to show with these psychology tips, you could do the same. Okay, guys, tip number one, you guys need to stop being so hindsight oriented and results oriented and become system oriented and the way you execute. Okay. And basically a couple things how I mean by this is there'll be a trade and on paper, it's a really bad setup. There's not a lot of good confluences. The momentum's bad, et cetera, but it works. Just because it works, you shouldn't say in the back of your head, oh man, I should have taken that, or oh man, maybe that was a good setup. No, a good setup can fail and a bad setup can work. But again, when we think about trading over time in a long period, right? In a month or 3 months, if you develop bad habits and you keep taking those bad setups over and over again, you're going to get cooked. Okay. You're going to get cooked. So that's why you really need to think about trading as a system. Just because a setup worked does not mean you should have taken it. It's still a bad setup at the end of the day. All right. And another thing is taking profits. Okay. I have a lot of people talk to me and they're like, hey, I have a really hard time holding a trade, holding micros, holding runners. I get really nervous mid-trade. And for me, it just goes back to that first point I made where it's like, you need to treat trading as a system, okay? If your system says that you should be trimming 30% at TP1 and holding runners because there are some liquidity areas we can hit, you need to do that. And whether price goes back to your entry or whether price hits your TP, you need to be perfectly okay with the outcome because you are executing a system. So guys, if we hop back to the charts, I'm going to show you 2 examples here and how I messed up my system and I got severely punished for it, right? So normally I do not use a fixed 1R or 2R. That is not my system. If you want to, and that is your system, that's perfectly fine. But you don't deviate from your system, right? So this was a setup on June 5th. And I was looking for shorts, right? We could see on NQ here, it comes and it sweeps this high right here. And then on ES, the same exact high, it does not sweep the high, right? Creating a bearish SMT at the top of this range here. So, right. So I'm looking for shorts. I would like shorts. And I end up taking an entry once we get past this second IFEG. Okay. Now, normally, what would I do? Okay. Normally I would enter here. I would maybe trim 30% of my position at these swing lows, hold some runners, trim more at the 50% level because this is the daily range midpoint and often price will reject here, so I'd trim 30% here. I'd maybe trim another 30% here, and then I would hold runners for, something crazy, maybe something down to these lows, right? But what did I do? It was 12 o'clock. I got impatient. I just wanted to get out of the market. And I said, you know what? I'm just going to take a fixed 2R. I'm just going to take a fixed 2R. So here's my executions. I entered at 875, so right under the gap. And I trimmed full at 2R at 845. Okay. So this was my full trade right here. This was my full trade right here. It was a little above a 2-to-1 risk to reward. And that was it. And I was out of the trade. And yes, I did make profits, but if I just stayed to my system, look what would have happened. Okay. I would have entered at 275 still. I would have trimmed at TP1. I would have gotten another trim at TP2, like I showed you, this yellow line. I would have never gotten stopped out at break even. And then this thing went all the way down to my final TP. So again, I'm not results oriented, but I didn't follow my system. And normally I take partials, I hold runners, and if I just did that, I would have caught this trade, right? Because I deviated, because I didn't follow how it's supposed to, you know, I missed out on a 200-point trade. And I deserve that, you know, I honestly deserve that. So that is why it is very, very important, because even if you can catch a trade like this once a week or once every 2 weeks, this is going to make up for all those trades if you were to just go a 1-to-1 R, or, you know, don't hold your trades as much as you should, because this is going to increase your win to reward, your risk to reward by so much. This is a 15-to-1 risk to reward, or 1-to-15, you know what I mean? But absolutely crazy trade. And I'm going to show you one more example where I do follow my system. Here is the trade I took Friday. Just kind of a little markup. What I saw here was we were sweeping the New York AM low. So we're sweeping the New York AM low. ES did not sweep the New York AM low, so we have the sweep, and then we have the SMT, that bullish divergence, and then on top of that, we had really good reactions to the sweep, and then finally we have the inverted fair value gap, right? So once this inverted fair value gap inverses this gap, we would then go look for a long, and then we're targeting pretty much New York high of day. So in this example, we would pretty much just be looking for one end of the range to the other, right? We come down, we sweep the New York AM low, we're looking for the reversal back up to the New York AM high, right? So that is the trade. Now, this time, I actually follow my system, okay? And you'll see right here, you enter long on the close of the candle. You could do first TP around 20 or 30 points. There you go. So this would be my first TP. I would move my stop loss to break even. Again, you could trim 30 to 50%, whatever you feel at the time. And then you're holding runners to the high. Now, what I want to show you here is I believe price consolidates a little bit. And again, the inexperienced trader is going to say, man, you know, I'm sitting in this trade, I'm in profits, I don't want to lose them, and it goes back, I'm just going to get out, you know? That's what the inexperienced trader would do. And let me just fast forward a little bit. It does, yeah, we do consolidate here a little bit, you know? We actually sit in this trade for about 20 minutes. So as you're trimmed, you already trimmed TP1, the inexperienced trader would just get out, and they just be like, you know what? I'm just going to take my profits. I'm done. It is what it is. But for me, I said, okay, you know, I already trimmed a good amount of my position. Even if this were to come back to break even, this is still a green day for me. I'm going to hold runners because I believe in my system and that there is still liquidity above us that can be hit. And if that gets hit, I can turn a pretty good day or an average day into a great day because my runners will hit full TP. So that is what I do. You know, I'm okay if it comes back to break even. I'm okay if it goes to my final TP. That is what you need to be telling yourself. It doesn't matter what happens, okay? You let your system play itself out and dictate the result. And that's what I was telling myself in this trade, right? So I sat through 20 minutes of consolidation, and finally, after 20 minutes, boom, there is full TP hit, right? So it goes from a 1-to-7 risk to reward trade, or a 1 to 1.7, and because I just stuck to my system and I said, all right, there's no reason to get out full here. There's still more liquidity areas we can go target. I'm going to stay in and see what happens, right? Boom. It turns into a 1-to-3 risk to reward, just like that, you know, and full TP gets hit. So I learned from my mistakes, you know, I learned from my mistakes. And I think this is really important when you're trading ICT. You cannot cap your risk to reward. Because, you know, we might have some days where, oh, we're just going to get 1-to-1s or maybe a 1 to 1.5, and that's just what the market's giving us. But you really need to capitalize on great days where you're going to get a 1-to-10 or 1-to-5, because again, those can make or break your week. All right, guys, so hopefully you enjoyed that video. Again, I think trimming is a really, really big thing for trading and just ICT in general. And if you can just fix your psychology and approach it as a robot, you're going to do much better. You know, when I talk to beginners, the number one thing they tell me is, you know, have problems holding trades, getting out too quickly and stuff like that. And, you know, hopefully the tips in this video can help you. So thank you so much for watching. Leave a comment, subscribe. You can trade down below with me 7 days for free. I'll see you on the next one. Peace.